Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So on the daily time frame, Bitcoin getting a little bit of a push up into that liquidity that we were outlining for you for the last few days. We were worried that there would be a little bit of a stop hunt to the downside, but overall looking at that 300 million to the upside. What do I mean by that? Well, let's go into High Block Capital and take a look at the liquidity. What is High Block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait. So we're looking over the weekend at this guy over here at to the tune of $306 million at 27,271, and sure enough, boom, they cleared the whole 50x short range all the way up to this guy here at 27,451.
Fatality.
So all the YouTubers that put out shorts down at the bottom here because they were seeing rounded tops and stuff, we're not seeing the same things on my oscillators and liquidity, so they were getting their audiences wrecked. And then now we go into this level here. You got $291 million opening up into this 27.4 region, so we could be coming down. We are coming down to that 291 million on the other side of the equation, also destroyed.
Fatality.
And so they come back and tap. They go up to go down and down to go up. So now you got a 50x pool of the partner in crime at 26,734. Let's go ahead and mark that off before we go any further. 26,734. Let's go see if they want to go tap that 50x pool or continue higher. 26,734. That would put us in our range, that line in the sand we were talking about from before, which we never broke. So there's a little pool inside of here. There's a little bit of happiness inside. So look at that. They came back to our pool up here. 269. They went up even higher on the spot market here, 290. And then they cleared this range and then came back down. Boom. Actually, we'll just leave it there until we get to our momentum. So let's expand our vision to the higher time frame pools, shall we? What's up, Spragadocious? All right, so let's go ahead and turn this to max liquidity. Max. So we did have that 7-day imbalance to the upside as we talked about. There's still some more up at 27.8. Now also getting thick on the 26.4 region. So if they clear a certain level here up in the 27.8 range, maybe they come back down at some point on the 7-day imbalance. Monthly imbalance is to the downside here, so getting double digits down below at 26.4, 26.8. These pools getting piping hot on the monthly. Piping hot, fresh out of the oven. And same thing with the 3-month. Got that piping hot liquidity down at 23.6, and also on the 6-month. You got that piping hot substance down at 24.3 and below. $100 billion pools down there, 400 billion in total. Of course, you got some percolating up above. Let's not disregard that idea. I was of the mind that they would come down and sweep the lows. When they got down to this region, they would finish the job and then go up. So I don't really believe in this sustainable upwards move here. I think coming down into this 261 billion at 23.6 and then possibly getting everyone bearish and then ripping it up to take the highs for one last time, and then we come down. But that's just a longer term narrative, so I pay it no mind other than in my own head. So going back to the monthly time frame here and turning on the momentum of our oscillators. Boom, boom, boom. Link in the description for more. This is Momentum Master. You can scroll down to the features, toggle everything at your leisure from Bitcoin's absolute bottom from this run up in November. Before we knew it was the bottom, you could see the trend cloud, the baselines, the stochastic array, and read about them as they come into prominence. Okay. So you were getting possibly before, if we go to an hourly time frame. So back here, we were talking about this cloud being kind of a line in the sand. We don't want to go beneath this region here, and then we didn't, and we've been holding the cloud ambiguously ever since on the hourly. Let's go ahead and see what the angles of the clouds were insinuating. So we were seeing that hourly cloud kind of push us up here, and this cloud on the 4 hour still managed to come down more. We're seeing that this could possibly curve. It still came down more in an angle here, so it's still being extended out into time like this. And the angle that we're looking at to the upside here is on the 12, if I'm not mistaken, 12, 22, and so on. So this 12-hour cloud is starting to thin here. So I said even if we get up to this cloud, we could be getting a bearish retest back down. So we came and got that pool of 50xers, so they are gone now. Sayonara. And let's go to the daily and make our descent. So we came down to the daily cloud here, trend cloud. The trend cloud shifting to the upside. We had some consolidation at that last time back in September and boomed up to the upside. Are we getting a second bounce off of the cloud? Trend cloud, it happens over and over again. We have the converse where you come up to the cloud, bearishly retest, and boom to the downside. So same here, kiss, 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 fail, kiss, fail. So the same thing could be happening where we kiss it on this side and we bounce up. And even if we bounce up, we could give it all back. It's a lot of games on both sides. So let's go ahead and look at there's a lot of lines here. So we're going to delete this place where we got rejected off the 786 here. It was a 786 to 786 play here. It's all in the past now, but actually we'll leave it up. They're not conflicting in the same region, so it's okay. So daily stochastic oversold, money flow beneath the RSI, suggesting that the money could come back in here and bounce on the daily time frame, just looking at momentum alone. If you come to the 22 hour, the 22 hour starting to take off here too, with the money flow beneath the RSI disparities, suggesting you could come up here on the money flow. If you go to the 12-hour time frame, also money flow beneath the RSI, suggesting the 12-hour insinuation. So you have these medium to high time frame subtle support levels of time frames. The 6-hour overbought here on the stochastic, but as I said, the higher time frames subtly supporting that idea of pinning the stochastic. You're getting the rising sun event on the Williams here. And if we go into the 4-hour time frame, 4-hour time frame previously had money flow above the RSI, causing this bearish divergence, hidden bearish on both the RSI and the money flow, which caused us to stall out for a hot minute up here. And then we came back down, meandered, and this rising sun event of the Williams just brought it back up for a double top over the weekend. So now back to the hourly. The hourly cloud was holding. They played a lot of shenanigans with the cloud here. So if you were a cloud player, it would have been spooky to play over here as well. It wasn't holding stably. And yeah, so let's go into the 15-minute and see what we can glean for today, going into False Move Monday, October 16th, 2023. So the 15-minute is now reset, and it looks like it might be looking to stab up to the upside. It's holding this super trend level. If you see this blue line here, this is the super trend. We're just beneath the cloud, which is thick, and held the super trend for 3 candles, 45 minutes, and now we could be making another 15-minute stab to that pool imbalance at 27.8. The partner in crime still exists. They do have this thick, long pool down below, though, so they're literally caught between a rock and a hard place. And let's go ahead and see the 7-day once again. So the 7-day imbalance has that 27.8. That's that partner in crime we were talking about at 27.8. So they could bounce up to that level. That's quite a far ways away, though. That would put you all the way up here. That's a bit much for a Monday on an Asian session. So you could be looking for a double top scenario. This level is also a bearish trend-based fib. So let's just make it clear what it is we're looking to see here. So the bearish trend-based fib level is the 706 trapdoor, I call it, that 27.284. So this rejection point as it stands right now is something to be careful about, because you have this impulse retrace to the upside, which means a C continuation, which we did have down to this pocket that we were talking about. We had price action trapped in for the better part of last week and called it exactly to the T down into this region. And a bounce off the 786, so we're back to the 706 of this bearish trend-based fib. Can we get a rejection back down to the fully 1382 level and take out these pools? That could be the next step if we double top off of this 27284 region. Okay, and then this is a larger time frame, 236, bearish trend base fib level at 26,994. We were previously looking at, as long as you are beneath that, you're bearish back here, and so this could be the C wave wanting to come down into these levels on a larger time frame. So this is our 3-day kiss that we were talking about to the cloud. This cloud is turning purple here, and we kissed off it and rejected, so this is why we're looking at shorts up here, while other YouTubers were calling for 30K and asking you to join their trading group. All right, so let's go to the 15-minute time frame. You have this cloud still thick. You could get this little double top bounce again. Watch these blue levels here, 27,288 and 27,363. Can we break through to the other side of that? Again, this yellow line is the 12-hour cloud, so you could get rejected off of that. So even if you do get a 15-minute play, where does it fatigue off of and go from there? If we look at the DXY, let's go see how it's doing. Kind of dumping off the face of the earth from this open here, and still it's only a healthy retrace after a large run up. It's a good old cup and handle bullish order block retest potential perhaps, which would bring things down for risk on assets like Bitcoin. So you got the 6 time frames oversold, bounced up. Now you're coming back to the top of the range, the adaptive, the weighted here, and you could basically bounce off that weighted moving average. Okay. Going to NASDAQ. NASDAQ had a bit of a pullback into, and hasn't hit the equilibrium level, or it hit this little fair value gap down here. Found a little bit of a bottom, but could continue lower for the equilibrium bounce idea from this impulse out here. We will see. We will see. Let's go into the total, see how the total is doing. We were talking about the total coming down and bouncing. Whoops, it looks like we got a rocket ship on a 4-hour time frame. We were also getting that on a Coinbase chart for Bitcoin here. We were talking about that, which is also why we were looking for a long idea. These rocket ships are deadly, as are the nukes. We had a rocket ship down here, so, and boom, we boomed up. Rocket ship here, now we're starting to boom up. I don't play against my rockets. That's something you don't want to do, really. And then you got the USDT dominance now coming back above a certain range here, a level here on a daily, I believe. It's where a lot of daily touches were occurring here, a lot of consolidation. So getting back above this 8% level of the USDT dominance means a lot of people waiting in USDT, a la getting kicked into USDT from a drop. So it's slightly retracing here after going up and kicking people into USDT. So we could bounce off this and continue on the daily cloud. This means people investing money, taking it out of USDT, putting it into a trade. So if it comes down to that daily cloud and bounces, that means a move on the daily for Bitcoin could be inbound. And then the Bitcoin dominance now doing the opposite, where it is kind of bouncing off the channel. Got this upward angle here, starting to taper slightly, but if you do get that double top scenario going, you could get a bit of a dominance push as the USDT dominance drops, which means Bitcoin could continue on its merry way to the upside. So again, it's false move Monday. You got that large liquidity pool of longs that entered here, 291 million. So if they retraced into the 100xers, and now they could be coming back on the 15-minute to these 100x shorts at 27,319. So we'll see how the 15-minute gives us our due and how that translates into this cloud bounce idea into the basic idea of continuing into London. So how does Hong Kong transition into London is learning about the 3 exchanges sessions and how they hand off to one another like a relay racer. The Asian session hands off to London, which hands off to New York, and then watching that narrative begin between the sessions is key to understanding how liquidity works. So how does Asia pump it to dump it and stay above this range? Then maybe London will complement it, do a stop loss hunt and continue. If Asia pumps and continues back down to the same range, they were just clearing the range, and then London could basically continue in that direction. They complement one another. Rarely do they all 3 act in concert, but it is possible. So if Asia and London do one thing, New York might do the opposite, for example. So I can't give you that prediction 12 hours from now, but we can keep you set up for how to look for it. The 4-hour is overbought right now. So the 4-hour is getting overbought. We talked about that subtle support of the 12-hour and the 22. If you cannot break, so there's this bearish super trend that's been holding since basically October 3rd. Rejection off the bearish super trend. Came back down. We've seen rejections off the bearish super trend on the 4-hour. This is the next one, that level at 27,223. If we cannot close a 4-hour candle above this level and the 706 that we were talking about, then it's basically setting itself up for a double top to come lower. Okay. We previously had this rejection off the 618 of this impulse. We can delete that, and let's go and take this one from here to there. The equilibrium of this drop is right in that 706 region. So this is the region to look at, really. We'll just mark off the region for what you need to look at for a potential rejection zone, if you will. If you stay above this, you're bullish. If you break below it, you're bearish, plain and simple. And that's my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same. Bring in the fire, the accuracy, the precision, all that fun stuff, and we'll catch you for NQ Futures later tonight.